Hello, everybody. My name is Lush Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending May 26, 2023. Looking at the market indexes for the week, the TSX is down, mostly on the Canadian big bank earnings, but the S&P 500 and Nasdaq are up, with the Dow Jones and Russell 2000 being down. Gold was down, oil was up to $72 per barrel for the week. Looking at Canada, the Canadian big banks reported this week and generally missed on the street expectations of earnings because of more than expected bad loan provisions being set aside. Note that these are not loans that have defaulted, just money being set aside in case those loans do go bad, which is wise. There has been worries about U.S. regional bank issues, which have brought the Canadian banks' share values down in March, and worries about commercial loans, especially office space, are seen to be a risk if the owners can't pay their loans. Expenses were higher, and inflation has increased wages. The banks now have low PE multiples at recessionary levels, with some around 7 PE, and they are increasing their dividends. I see these as buying opportunities, and as always, they will do well in the long run. Canadian banks are one of the strongest oligopolies in the world. Raising dividends shows the results miss is not a long term problem. Keep holding and be comfortable buying more. CIBC is the only big Canadian bank to beat earnings estimates for the second quarter, reporting Thursday that higher loan loss provisions were offset by strength in personal and domestic banking. RBC missed estimates with a 14% profit drop as it set aside more money for bad loans. TD missed the mark amid fallout from its failed deal for the Tennessee-based First Horizon. Scotiabank and BMO reported Wednesday, both also missed estimates. Canada's big banks find themselves in the spotlight as economic uncertainty abounds and consumers feel the pinch of higher rates and stubborn inflation. The Bank of Canada's quarterly financial system review came out recently, and there were some interesting observations I'd like to share. In recent years, some households have stretched their budget to get into the housing market, taking on large mortgages with lengthy amortization periods. The use of variable rate mortgages has also increased. The share of new mortgages with an amortization period longer than 25 years increased from 41% to 46% over 2022. In 2019, this share was 34%. A longer amortization period reduces the size of monthly payments, helping lower debt servicing costs, but also increases the period of household vulnerability because equity is built more slowly. Higher interest rates are now increasing debt servicing costs for many mortgage holders. Debt service ratios, DSRs, for recent homebuyers have increased significantly. The median DSR on new mortgages rose from 16% to more than 19% over 2022, and the share of new mortgages with a DSR of more than 25% increased from 19% to 29% during the same period. Higher DSRs reduce flexibility for borrowers who experience unforeseen increases in expenses or losses in income. Higher interest rates have also contributed to declines in house prices across most regions of Canada over the past year. The chart is showing the price index changes compared to February 2020. For households that purchased homes near the peak in prices and made smaller down payments, this decline could result in limited or negative equity in their home. Lower home equity limits in a household's ability to refinance and extends their amortization period to reduce their monthly payment. A severe recession with significant unemployment and further reductions in house prices could cause substantial financial stress for some households, but the number of mortgages in arrears is still tiny. Lower home equity could limit refinancing options on mortgages, leading to an increase in defaults. Credit losses to lenders would also rise if the liquidation value of a home in default is less than the value of the outstanding mortgage. To date, about one-third of Canadian mortgages have seen an increase in payments compared with February 2022, just before the Bank of Canada started raising its policy interest rate. By the end of 2026, nearly all mortgage holders will have seen their payments increase. Assuming mortgage rates evolve according to current market expectations, the median payment increase over the 2023 to 2026 period will be about 20%. For fixed rate mortgages, the average increase in payments at renewal will be greatest in 2025 to 2026 at between 20% and 25%. For variable rate mortgages, the average increase depends on whether the payments are variable or fixed. Variable payments, these borrowers have already experienced an increase in payments of close to 50%, with the bulk of the increase taking place in 2022. For fixed payments, these borrowers will need to increase their payments by approximately 40% to maintain their original amortization schedule, assuming a renewal in 2025 or 2026. Looking at ever increasing car prices in Canada, prices of EVs currently available for purchase in Canada can range from 39,498 to 189,000 according to the Canadian Automobile Association. That's an average price tag of approximately 83,000, much higher than the Canadian average for new and used vehicles. According to a December 2022 report from autotrader.ca, capturing the fourth quarter of 2022, the average price for a new vehicle in Canada is almost 59,000, a new record high. Used vehicles average at a price of 36,000 and change. According to the report, even though the used average is still up 9% year over year, it has been on the decline over the past 6 months as used vehicle inventory improves. In a new agreement, Ford will buy up to 13,000 tons a year of lithium hydroxide produced at a Nemaska lithium factory in Bécancour, Quebec, which is expected to open in 2026. Canada's household debt has been increasing as percentage of GDP. It was around 80% at the time of the financial crisis and has increased to 100% today. The US went in the opposite direction from 100% in 2008. They deleveraged and are now at 80%. Three-quarters of the debt is mortgages with the high housing prices in Canada. Real estate prices are growing faster than the economy, apparently. Turning to the United States, the US GDP preliminary quarter over quarter for Q1 came in at 1.3% growth annualized, better than the expected 1.1%, but lower than the previous 2.6%. The US is still not even close to a recession. The US Personal Consumption Expenditure PCE price release, which measures the changes in the price of goods and services purchased by consumers for the purpose of consumption, came in at 4.3% as expected for Q1, but higher than the previous quarter. The US still has inflation in the 4% range. On Friday, the US PCE price index, indicator of the average increase in price for all domestic personal consumption, was 0.4% for the month as expected, and this was the same as the US personal income increase for the month, confirming inflation in the US on spending and income of roughly 4.8% annualized. Nvidia reported a huge earnings and revenue beat on Wednesday with an even bigger upgrade in guidance. They grew revenue at 19% since last quarter for Q1, and they think they will grow revenues for Q2 by 33%, driven by, quote, a steep increase in demand, end quote. related to the generative AI and large language models. That's also quarter over quarter growth. Nvidia shares soared after the chipmaker posted a big earnings beat and offered sales guidance way above Wall Street's estimate. The stock was already up 109% this year going into the earnings report after the bell Wednesday. The company is riding an artificial intelligence driven wave of demand for chips. Its data center business posted a 14% increase in quarterly revenue. This robust result shows how important AI chips are becoming for cloud vendors and other companies running a lot of servers. The minutes of the Federal Open Market Committee's May 2nd and 3rd meeting came out this week and showed that Federal Reserve policymakers, quote, generally agreed, end quote, that the extent to which further hikes may be appropriate was less certain and preferred to keep the policy flexible. Quote, almost all, end quote, Fed officials said downside risks to growth and upside risks to unemployment had increased due to banking stresses, according to the minutes released on Wednesday. Also, officials said that progress on core inflation had been slower than they had expected, with some participants saying that, quote, based on their expectations that progress in returning inflation to 2% could continue to be unacceptably slow, additional policy firming would likely be warranted at future meetings, end quote. In a unique turn of events, Ford CEO Jim Farley and Tesla CEO Elon Musk joined each other for a Twitter Spaces discussion Thursday. The eyebrow-raising conversation turned out to be a forum for the two executives to announce a partnership that will allow Ford's growing slate of electric vehicles to use Tesla's charging network, and it could turn out to be a pivotal moment for the United States amid a broader push to EV adoption and move away from vehicles powered by fossil fuels. Quote, working with Elon and his team, I'm really excited for our industry and for the Ford customers, end quote, Farley said. Now for some bits and pieces. China has banned microchips from the US company Micron in its infrastructure projects, giving national cybersecurity as a reason. When cutting foreign technology companies from Chinese supply chains previously, Beijing has long chosen to work obliquely or even secretly. Regulators would give executives backroom lectures, weigh them down with excessive red tape, or hit them with occasional office raids. Rarely did the government tell a firm outright that it was no longer welcome. But that is what it signaled Micron Technology in a late night announcement on Sunday. The Chinese government barred companies that handle critical information from buying microchips made by the Boise, Idaho based Micron. The company's chips, which are used for memory storage in all kinds of electronics like phones and computers, were deemed to pose, quote, relatively serious cybersecurity problems, end quote, by China's internet watchdog after a review. Estimates range in Canada, at least before the arrival of COVID's micro weddings. The average wedding cost between $22,000 and $30,000, slightly more at around $33,000 in the US. Some report that cost of weddings have doubled in 10 years, while the median annual family income in Canada increased only by 26%. So weddings are more expensive than they used to be, and they used to be expensive. Finally, turning to next week, we have companies reporting. On Tuesday, we have Hewlett Packard, Canopy Growth. On Wednesday, we have Salesforce, National Bank, and CrowdStrike. Thursday is Broadcom, Dollar General, and Lululemon. Economic events next week. On Monday, we have Memorial Day in the US, so nothing is happening. On Wednesday, we have the Canadian GDP with 1.5% annualized growth expected, so we'll see if Canada is in a recession. We have US JOLTS job openings. On Thursday, we have US jobless claims and initial jobless claims and US oil inventories. And on Friday, we have US hourly earnings and payrolls to see the US wage inflation. If you have any requests on what you would like me to cover in future videos, please put that in the comment section. If you'd like to get in touch, please reach out on any of these social media channels, and may you have a profitable day.